closer to home, in Australia, inflation continues to be a little bit more sticky, although it is sort of much more under control. What do you think is going to happen in terms of interest rates this year? I think some were predicting rate cuts in November. Um, I'd say maybe there's a slim possibility, but I think everybody's suggesting that it's likely to be at the latest Q1 next year. What do you think, Jonathan?
Yeah, it's a tricky one, Eugene. I don't envy Michelle Bullock in this environment. I look, I know. I mean, I'm pretty convinced that the RBA would love to cut rates. I mean, everyone else in the world is cutting rates. The ECB has cut rates. The Bank of Canada has cut rates 3 times. U.S. central banks cut by 50 basis points. Bank of England is cutting rates. The Swiss are cutting rates. Everyone's cutting rates. Of course, with the honourable exception of Japan, they're in a different monetary universe, of course. But look, it looks like we've run out of time for a rate cut in calendar 2024. And I think you're right, Eugene. I think we're probably going to get a rate cut in the first quarter of next year. I think you're right about inflation being sticky, and the sticky part of Australian inflation is certainly in the services sector. And the RBA governor constantly highlights this. And in her latest press conference following the last RBA decision, she spent a bit of time emphasizing the stickiness of service-based service sector inflation. So, there's the conundrum for the Reserve Bank. I think they'd like to be cutting rates, but they can't be seen to be cutting rates if their inflationary mandate hasn't yet been met. And the RBA is saying it's, their targeted rate of 2 to 3 is not going to be met until, kind of back right into 2025. So, notwithstanding the very significant pressure that the Australian government is putting on the RBA, and there's a lot of question marks around that, which we may not get into today. But I don't envy the RBA in this situation. And as I said, I think they'd like to be cutting rates, but they can't be seen to be cutting rates. And certainly, I think the Australian government, quite frankly, is shooting itself in the foot, because every time the Treasurer goes on and on about the RBA, of course, the RBA can't be seen to be responding to political pressure because the RBA is independent. So I think if the Australian government just kept quiet for 5 minutes, the RBA might actually feel that they can start cutting rates.
It's very true. Like when you say the RBA can't be seen to be cutting rates, and certainly can't be seen to be bowing to political pressure, because they're not a political institution in a sense. They're supposed to be independent. They're supposed to make decisions based on, economic data and what's best for the country economically. And when you talk about not being seen to cut rates, I think the public would love rate cuts. But is what you sort of mean that in economic circles, like anybody who understands economic data, maybe not anyone, but the majority would say, well, you can't, because your mandate is, unless they were to change their mandate, right, which they haven't done. So it's because cutting rates would be the popular thing to do. There's a lot of people that are experiencing financial stress, but it would be a disaster if they cut rates too early and then inflation took off again and they had to raise rates again. Right? Every central banker in the world probably has nightmares about that happening. So yeah, I don't envy them either. It's a really tough spot. But we're probably, and again, as we said about the US, they're definitely going to go into an easing cycle unless something dramatic changes. Probably next year. It's just a question of how quickly and how far they cut rates too. So we're just going to have to wait and see and see what the numbers look like. Are you still suggesting there's a high probability of recession both in Australia and in the US over the next sort of 6-12 months, Jonathan?
I think Australia's pretty much in recession. I mean, obviously
0.3% over 2 quarters, right? 0.2%.
0.2% in the latest quarter. I don't really. I mean, we're so close to the zero line. And obviously, we know on a per capita basis, we've had 5 consecutive quarters now of contraction in GDP. Look, I mean, the ABS, the Australian Bureau of Statistics, is coming out with, you know, this very fractional level of growth. And that, you know, okay, fine. Yeah, I'm not going to get too worked up about, you know, are we going to have a minus here and a positive there? I think we're right around the flat line here in terms of growth. And, you know, just talking to just everyday Australians and small businesses here, I have so many people say to me it's worse than 2008 in terms of general sentiment, particularly in the retail sector. So I think we're flatlining here, and we all look forward, as you've implied, to the Reserve Bank cutting rates next year. And will we get a technical definition of a recession, which is 2 negative quarters of GDP? I don't really know. Obviously, in real in per capita terms, we're obviously there, and we've got the weakest household spending since the early 90s.